Hey everyone, today on the Final Bar, it's Thursday, February 23rd. We'll be talking with Louis Llanes of Wealthnet Investments in Colorado. We'll see some of the charts and themes he's thinking about as this choppy market continues. Today, sell-off in the morning, nice rally into the close for the major averages. Ladies and gentlemen, this is the Final Bar. Hey everyone, welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cold Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the power of StockCharts. The StockCharts platform was created many moons ago to help investors take control of their investments, empower investors, online investors, to make better decisions using the best practices of technical analysis. We've learned that the markets can be analyzed technically from people like John Murphy and Martin Pring, and that's been reinforced by so many that have followed in their footsteps, helping us recognize the importance of price and breadth and sentiment, trend and momentum, ways of defining what the crowd is doing and anticipating what may come next based on our knowledge of market history and market dynamics. We'll try to touch on as much of that as we can in our show here together. Let's get right to our market recap and look at what's happened with the market today. Sort of a V-shaped contour to the action today. You had the S&P opening a little bit higher, just above 40.25. Trading lower through the course of the day. So right around lunchtime Eastern, we hit a swing low around 39.70. We're tracing pretty much all of that back going into the close. End of the day, S&P up about 0.5%. Nice recovery from what was a negative day, undercutting yesterday's range around lunchtime. So nice rally in the afternoon session. The NASDAQ composite up about 0.7%, and mid caps and small caps all up as well. The VIX lower a little bit by about 1.2. That's down to 21.1. So still above 20, which is sort of our loose definition of a volatile market, right? Is the VIX above 20? And if not, then things are settling down and we have a potential more sustained move in some direction. But for now, the VIX is remaining above 20, currently just above 21. Let's look at some other asset classes very quickly. Then we'll check a chart of the S&P and look at some of the individual names I think that are worth mentioning today. Interest rates overall moving lower across the board today. 10-year yields down around 388 going into the close. 5-year yields around 410. You can see the dollar index, not too much change from yesterday, and the dollar being exceptionally stronger would be a big damper on the risk trade that we've seen work at times here in the last month or so. We're not seeing that today. Sort of a flat move from yesterday. Gold recovering a little bit nicely. It was selling off earlier in the day, following through from yesterday's pretty negative session, regaining part of that on the way back up, finishing almost flat for the day. Silver down about 0.6%. Copper prices down in a pretty significant way. And energy prices actually managed to be positive here, which has been a nice change from the trend of weaker energy that we've seen recently. Some mixed results on the top 10 coins. Looking at crypto land, we've got Bitcoin down about 1%, Ether up about 0.5% to 1650. Bitcoin is currently just below 24,000, which again, those big numbers have been key to watch. 20,000 and recovering that level was pretty important. Now the question is, can it follow through? And just like the equity markets have stalled out, you're seeing a bit of a stalling out on the charts of Bitcoin and Ether and elsewhere with the major cryptocurrencies. Let's look at a chart of the S&P 500 here. We've talked about this trend line, and what's really interesting is earlier in the day, I was bringing up this particular chart as I'm starting to think about the show and think about where we might want to go as we're talking about different movements in the market. This red trend line is one we drew, over the last week or two, reflecting on the fact that the S&P had made a new swing high, but now was failing to hold it. Now is back in sort of this congestion area, this blue shaded area. Yesterday's low was pretty much exactly on this red trend line that we drew, connecting the low from October to the low from late December, early January. Lined up pretty well with yesterday's low. Earlier in the day, we're actually breaking below that trend line. I'm getting the headline ready to start typing in something about breaking through trend line support. But very interestingly, by the close, we actually popped back above that trend line. So we did not close below the trend line. We've talked about overall the momentum, which had been negative earlier in the day, holding above the RSI 40 level. So I think at this point, we're holding the 50-day. That means yesterday and today are sort of a successful test so far of the 50-day moving average. We're testing trendline support as well. If those things hold, this is sort of a market at the lower end of a larger uptrend. I guess is how I would have to loosely describe this trend that I'm seeing, right? The big downtrend from 2022, arguably reversing, and now we're seeing higher highs and higher lows. We start breaking trendline support off of those lows, and I think you have to question that thesis. Today, a question mark midday, I think erased by the close as we renew the push to the upside. Buyers coming in after lunch and pushing the market higher. Leading the equity markets to the upside, technology, NVIDIA, one of the big names in the news today. We'll look at the chart of NVIDIA here in a moment. But the technology sector, the XLK was up 1.6%, followed by energy up 1.4%, REITs up 0.9%. Couple sectors underperformed, utilities the worst, communication services as well. Both of those were down about 0.5%, followed by consumer discretionary, consumer staples, both a little bit below zero, essentially flat for the day from yesterday's close. I wanted to highlight some of the names on the move, some of the names that have been reporting earnings either just recently or coming up here after the close. Just thinking about from a technical perspective, what the charts are telling us around this potentially significant catalyst, telling us about the prospects for the company on the fundamental side here going forward. Etsy is one that came to mind, reported after the close yesterday. Kind of a choppy, volatile day. What's interesting is we opened higher than yesterday's close, traded down to around 120, but by the close, going back to the top, if you think about candlestick analysis, we don't show a lot of candle charts on the show, but we do occasionally. And what's interesting is candle charts, I think, are really optimal for thinking about short-term dynamics, right? Thinking about how things evolve during the course of the trading day. And the reason why that's the case is because you have such a clear visualization using the body of the candle and what's called the wick of the candle or the shadow, sort of the vertical line. So today, think about what happened, right? We gapped higher at the open after the company reported earnings after the close yesterday. Traded lower. So we opened around 131, we'll call it. We traded lower, and at some point in the day, we were down almost to 120, completely undercutting the range over the last week, making a new swing low here for this move off of the February high. By the close, though, we're back to the top of the range, not exactly at the top, but getting back above there. So think about what happened, right? We opened above the 50-day moving average, traded lower, but during the day, demand comes in or selling pressure is alleviated. And for whatever reason, the price is finishing more toward the peak of the day. In general, generally speaking, certainly in a downtrend, that sort of pattern is short-term bullish because what it indicates is instead of that downward pressure continuing, and instead of sellers continuing to push the price lower, instead of an absence of buyers not really coming in to buy in on short-term weakness, that's exactly what happened today, right? Buyers come in, buy in on the weakness in the price, and put it all the way back to back to the highs of the session. So overall, sort of a constructive move for Etsy, a victory snatched from the jaws of defeat earlier in the day. I mentioned NVIDIA with the nice gap higher. We talked about semiconductors yesterday with Dave Landry. And had an interesting sort of take overall on the semiconductor space, why it's an important group to watch. NVIDIA reporting earnings after the close yesterday as well. Nice gap higher today, finished today up about 14%. And again, while the severity of the move, while the jump higher have been a surprise, certainly, and that's an unexpected move, I think, in some ways, after making a new swing low yesterday, the overall trend is what's probably shouldn't be too surprising because we've seen strength off of the October lows. The semiconductor space in general has been a nice relative performer. The momentum has been pretty strong. This has been an area of the market that's actually shown a good deal of strength. And NVIDIA getting above 190, real classic breakout pattern. We call that an inverted head and shoulders pattern. We have a low surrounded by two higher lows. We take a neckline, which we broke when we got above 190 in the month of January. Overall, those are all technical signs that a chart has rotated from a pattern of distribution to a pattern of accumulation. So this gap higher is just the latest move among many demonstrating some strength in the space. So I think continuing to show some strength for NVIDIA. Names for Chinese companies have been a challenge recently. Certainly have seen some drawdowns in some areas of this market. Alibaba, along with others, have come off here recently. Alibaba made a new swing high around 120 in January, pulling back a little bit. What's interesting to me, kind of a choppy session. Most things did. opened around 100, ended the day around 94, which is almost exactly to the penny at the 200-day moving average. So just like the stock tested the 200-day a number of times from below and then finally broke above it, now we're testing the 200-day from above. My question with this sort of chart on a pullback, does it hold that key level of support? For now, it is. Now, earlier in the day, it looked like it was bouncing right off of there and potential to just, resume this uptrend. That's not the case. And by the end of the day, you have people selling strength, through the course of the day, pushing the price lower. So that 200-day moving average might be an important one to watch there. Some challenging charts in the healthcare space. When I was scanning for stocks making new swing highs and lows from my market misbehavior premium members, one of the areas we focused on was healthcare. And you look at names like Pfizer, some of the biotechs, Moderna. These are stocks that had certainly been showing strength in the fourth quarter. Moderna is actually making a new swing high, getting above 200. From there, we're making a lower high, and now we're reverting back to the downside. Today, a rough day around earnings. Before the open today, pushing lower about 7%. And again, that space in general, healthcare sector has been a tough one, and one that had been there had been some interesting, I think, stock picking opportunities in there. But overall, broadly speaking, some weakness from a technical perspective. Domino's Pizza DPZ gapping down back to its previous lows. So when I talk to people who are what I would describe as bottom fishers, people looking for beaten down areas of the market and opportunities to jump in, I can see why a chart like this could be very intriguing, right? We're back to the October low. We're back to just above $300 a share. We're oversold. Is this the point where the stock tends to bottom out? That may be the case. As a trend follower by training, I would much rather wait for signs of accumulation, signs that some sort of buying is coming in. We're not quite seeing that yet. Folks, let's take a quick commercial break. We'll be back with today's guest, Louis Llanes. We'll see you in a minute. Hey, everyone. Welcome back to The Final Bar. This is Dave Keller here at StockCharts.com. We so appreciate you joining us every weekday after the close for our show. A couple quick announcements before we bring on today's guest, Louis Llanes. First off, we welcome your questions. We'll do a mailbag segment on Friday's show, and we'd love to feature one of your questions live on the air. Our email is thefinalbar@StockCharts.com. We're on Twitter at FinalBarSCTV. We're on YouTube. Put a comment below the video you're watching on our YouTube channel. Make sure you subscribe while you're there, and we'll hope to get to one of your questions live on the air on Friday's show. So I want to let you know about the upcoming guests next week on Tuesday, February 28th. I'm really excited to talk to Chris Verone. Chris is a CMT. He's the head of technical and macro research at Strategas Research Partners. I've followed Chris and his work many years. He has a wide following in the institutional community. Very interested to see what charts and themes he is talking about. Also wanted to give you a heads up. Our first The Pitch, I believe, of 2023, or certainly the first one in a little while, is coming up in a couple of weeks on Wednesday, March 8th. We will be featuring three fantastic women technical analysts, Mary Ellen McGonigal of MEM Investments, Ms. Schneider of Market Gauge, Aaron Swenlin of Decision Point. I'll be moderating that conversation with the three of them. We'll see what stock and ETF ideas are top of mind for them as they pitch you 5 ideas each. You can see more information at stockcharts.com/thepitch. I want to welcome on today's guest, Louis Llanes. Louis is the founder of Wealthnet Investments, coming to us from Denver, Colorado. Louis, welcome back to the show. How are you?
Hey, it feels so good to be back. Good to talk to you. We're doing good. Doing very good. A little snowy here in Colorado, but we're ready for a little sun.
Yeah. You're smiling despite the market choppiness, the uncertainty as usual. You're smiling as you look at the markets. I appreciate that very much. We were talking before we went live today just about just the overall conditions, some of the ways that you are finding that you're approaching this market with your clients. And I wanted to start with one of your charts of FIW, which is a water fund. Can you talk us through this chart, the theme, and how you're approaching it?
Yeah, I wanted to talk about a ETF today because picking individual stocks in this kind of market is very, very tricky, and you have to have really good position sizing skills. And sometimes for individual investors or even institutional investors, it makes sense to buy a fund. And this is one of those cases where I think that that's the case, because we have in the water space, a lot of people are familiar that there's some big trends in the water space. This particular fund tracks the ISE Clean Edge Water Index. And, water is a key commodity that we think about as being just normal for everybody, but it's used in a lot of other applications for food and beverage, semiconductors, and the earnings growth is quite strong in this area. So I think the overall fundamental backdrop is a good thing to talk about, because I think I want to talk a little bit more high level about strategy. And one of the things that I find to be very successful is to have a good fundamental backdrop. And when you have a market where you've had a bear market, and a lot of these good situations have been in a basing phase, your leaderships tend to base and then they start moving higher. But a lot of times when they start moving higher, they don't just break out and just run. They tend to be more choppy, as you've been talking about. So I was going to talk a little bit about some strategies that I find very useful and profitable over the years that works in this type of environment. And I want to be a little bit more specific about what this environment is. It is an environment that came from higher volatility back into normal volatility, but it's still relatively high if you look at the S&P volatility, realized volatility going back since inception. So we're kind of we're in normal range, but it's a little bit on the upper high side. So normally during those conditions, you have more chop. And so in this particular chart, we've had that perfect scenario where the whole group comes down, it has a peak on November and hits a low back in June. And so one of the things that I like to look at is I like to use that anchored VWAP. I'm really happy to see that on StockCharts that you have put that anchored VWAP tool on there. Our colleague, Brian Shannon, has done some tremendous work in that area. And I want to kind of highlight how I use this in this type of environment. So one of the things that I want to assess first and foremost is this base truly transitioning from sellers to buyers? And the VWAP is a perfect tool to use that. So if you could see on that top line, that green line, that is the VWAP from the peak. And VWAP is basically the volume weighted average price from that point, right? And it's kind of like an estimate. You can think of it like an estimate of the average price traded weighted by volume. And it could tell you whether or not you're seeing a shift. And it's also an area where support and resistance tends to happen. So you could see from that peak that we've had several attempts to go to that high and bounces off of it. You see that? You got 1, 2, 3 times. And then now we have a period of time where it's above that. That's a good indication that, hey, we're probably in a shift. And that's just from a longer term perspective, because we're looking at a weekly chart here.
Right. Weekly chart really taking us off the 2021 peak. And I love how you pointed out, right, a number of times where it's tried to rally, sort of fizzled off, and then finally here in the new year, all of a sudden starting to show some strength.
Yeah. So if we can move on to the daily chart, I'd like to show you now what I mean. So now from a longer term perspective, we have this probably a good shift towards buyers. And so if we make the assumption that we're in a bull market that's going to begin, right? Let's say we're starting to a bull market. It's not going to be a perfect scenario. Sometimes you have these bull markets where it just rockets off, and other times it's really just choppy and it's hard to kind of execute near the lows. So, and I believe we're in that kind of environment. What I like to do is I like to do more of the mean reversion type entries, not breakout follow-throughs, meaning buy them on pullbacks and then to look for them to actually reverse as they're pulling back to find those pivot points, right? And so I like to use VWAP combined with what's called a Keltner. I don't know if you have talked much about Keltner channels or not.
No, but I know that. Please elaborate.
Well, it's kind of like a Bollinger Band where we're looking at volatility around an average. So I like to use shorter term averages, like say 5 days, 10 days, exponential moving averages, and looking at anywhere from 1.5 to 2.5 times average true range around that average. And that's what a Keltner line is, a Keltner channel is. It basically bounds that. So you can think of it as kind of like a noise filter. It's a very, very useful tool because it could be used in 2 ways. It could be used as a tool to find oversold levels, and it could also be used as a tool for trend following, because you could find out when you're breaking out through highs or lows, and you're breaking past the noise levels, and you could potentially be entering into a trend. So now in this case, I'm using it as more of an overbought, oversold type indicator, saying, okay, when we're coming towards the bottom end of this channel, because I'm bullish on this sector, right? I want to combine that and say, okay, that's kind of a setup. We're below the noise, right? So you have a lot of noise in between. And then I want to see some kind of stalling action. You notice that today, in fact, we had a little bit higher volume. Go to the bottom there, you can see we had volume up a little. And then we had kind of it's not quite a doji type pattern, but it's basically more of a stall. So buyers came up there. And you notice they came in right at the VWAP. Now, that VWAP line there, I like to use VWAP also in combination to give me some ideas about where average prices were, where institutions may be picking up this particular instrument. So we came below the Keltner line. We're past the noisy area. We're at the VWAP level. We've had a good little stall pattern. That's where I want to buy limit orders. So just in full disclosure, I own this particular ETF. So instead of trying to buy those breakouts just only to have them come smacking down on you, if you're bullish on an area, position size appropriately, and you could use these tools in combination, and start off from the big picture, overall trend. This is base really truly turning, and how can I pick up this over time and progressively move your way in rather than just jumping all the way in this type of environment.
I like that relating is sort of the big picture sort of risk evaluation or risk on, risk off versus the tactical game of actually pulling the trigger on a name like this. Another one, just to get to your final chart here, is MBLY Global, MBLY. It's a recent IPO from late 2022. How does this fit in? Similar sort of setup, or how would you approach this one?
Yeah, similar setup. They have strong revenue growth, strong earnings growth, and you don't see that very much in the IPOs. I mean, I look at all the IPOs literally and look at their earnings and revenue numbers, and there's just not that many that are making money and that are doing well and have a business that's accelerating in growth. This is one of them. And what I like about this is I like to look at earnings, and this is something that Brian Shannon brought to my attention. I think he brought it to my attention like 5 years ago. And I've started to do this. I've been doing it for quite a while, looking at earnings reports and to see if institutions are clearly supporting that particular stock after the earnings report. So that little E, what's really cool, StockCharts will put a little E there, tell you, hey, we just had earnings. And you could see what happened. We had this big day, right? Lots of volume. There was a lot of buyers and sellers just kind of fighting it out that day, right? But if you actually anchor your VWAP to that date, you could keep an eye on it. Now, in full disclosure, I own this as well. And I actually bought it a little before the earnings report, which is a risky thing. Don't always do that. But be careful when you do that. And especially with an IPO that's this volatile. But right. So I want to keep an eye on this. So you can see it's been holding very nicely above that volume weighted average price. And same scenario, it's coming down. A lot of profit takers are happening, right? Profit taking is happening right now. We had that little base, right? That we came off, we rallied up, a lot of price targets hit, a lot of technicians are pulling out the traders, those swing traders that, people follow, they're all selling, right? And that's what's happening right now. But what I care about is, are the institutions stepping in and are they going to take this thing higher? And so it appears that might be the case. We've had the similar type pattern, and it's what's really cool about these is you can use these as a relatively low risk entry. If you look at the difference between the volume weighted average price and the current level, you could use that as a stop indication, like how much risk do I have before we actually turn our way down? And you can size relative to VWAPs, and I don't always use VWAP for sizing, but it's one input in the process. Very handy tool. I highly recommend people, if you're using StockCharts, start checking out that AVWAP if you haven't done so already.
Yeah, I really appreciate you talking through. And we try to highlight new indicators that we've added. That was a brilliant little mini masterclass on how to apply it, real life situation, going through some things. I'd love to ask you, just because semiconductors are obviously one of the stronger groups recently. NVDA in the news today, we highlighted it in our market recap with a nice kind of gap higher today, up about 14%. When you're looking at a space like this, is this an area that you would suggest is sort of worth continue to follow, or are there areas of concern in a group that's really just performing so well at a time when others are struggling quite a bit?
Yeah, this area has been of interest for quite a while, and we have positions in it. A couple of names, most of the names that we're involved with are smaller names. Symbol ACLS, we have a position in ALGM, LSCC. These are companies that have a little bit faster growth. They set up their basing pattern set up nicely earlier, and they're now in the kind of what I call the extended mode. The bigger names are kind of starting to move up. NVIDIA's in a little bit different space, and there's a whole bunch of fundamental stuff we can get into. But just in the thinking about time here, I would say that this area on the smaller names are a little bit overextended, but overall, the backdrop fundamentally is good, and the charts look great. I mean, I think overall, if you put it out there, we follow something like 43 liquid ETFs, and most of what we invest in is individual stocks, just as information there. But we do also have some ETFs that we follow. Of the 43, the semi area is number 7 in our ranking model, so it's in the upper end.
Not too bad. Listen, Louis, this has been fantastic. I really appreciate you talking through some examples with us and sharing how you're approaching this market. Stay safe there in Colorado. We'll look to see you soon. All right.
All right. Thanks a lot, Dave.
That's Louis Llanes. Louis is the founder of Wealthnet Investments. Such a pleasure to have someone like him on to really talk about how he's positioning through an environment like this. There's a lot of uncertainty, a lot of question marks, but at the end of the day, focusing on a set of tools that help you really apply the toolkit and understand the markets. He did a great job, by the way. That was the best pitch I've seen for the anchored VWAP, which our friend Brian Shannon just wrote a book recently on his indicator, the anchored VWAP. Really cool that we have it in the StockCharts ACP platform. And what you can actually do is focus on particular dates. You click on the indicator, and then you can actually go to the chart and decide where you want to start that anchored VWAP. What price point, what date do you want to anchor to do your analysis? Really nice addition and well illustrated by our guest, Louis Llanes of Wealthnet Investments. We need to wrap the show, folks, and go to the 3 in 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. I was glad I was able to talk a little bit about semiconductors with Louis. I jotted down some of the names he was looking at. Some of the smaller names in that space. Semiconductors are way more diverse probably than we give it credit for. You tend to think of them as this homogenous group, but there are a lot of different sort of businesses that work there, but they certainly in general deal with the backbone of the economy. When I'm looking at a chart like NVIDIA, what comes to mind is to think about the gap higher in the context of the overall trend. Like one day is what we're thinking about today, the stock gapping up about 14%. But what's the larger story? Thinking about the fact that NVIDIA is above 2 upward sloping moving averages, the fact that the momentum is strong but not excessive, seeing that the relative strength is improving over the last 4 to 6 months. Those are all pieces of evidence that I think back up sort of a broader bullish context. Same thing, watch to see when those conditions change. That, in my opinion, is your sign that a chart like NVIDIA isn't working anymore. Aerospace and defense is a group that Louis and I talked about earlier, and I like this ETF. XAR is an interesting way of thinking of a space. There are a couple other ETFs that track this space. I think ITA is the one that comes to mind, but XAR is an interesting one as well. When I'm looking at this chart, overall pretty constructive. Boeing, of course, is a big weight in this ETF, a local Seattle company. When I'm thinking about this chart and looking at it, it helped remind me, why does this chart look constructive? What I would tell you, having spent years looking at charts and analyzing them, is the amateur way of approaching technical analysis is to look at the chart and say, this chart looks good, and have that be what defines your analysis. What I would say is a more rigorous, more expert way to do it is to think of it as a checklist. When you're just getting started, literally list out the pieces of evidence. Eventually, you internalize those, and you're just talking through them. This is a stock making higher highs and higher lows. The moving averages are sloping upwards. The momentum is strong. The relative strength is strong. Think about what specifically makes a good chart. Finally, I was looking at a series of ratios. I have the S&P on the top half of chart number 3 and the ratio of tech versus utilities on the bottom. When technology is outperforming utilities, when the XLK is over the XLU, conditions aren't that bad, and overall still holding up this week. Folks, that's a wrap for the show. I want to thank Louis Llanes joining us from Wealthnet Investments in Denver. All of our previous interviews are at StockChartsTV.com. For StockCharts in Redmond, Washington, I'm Dave Keller. Have a great night. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.